All right, let's get started. Welcome everyone. Today's January 2nd. First off, Happy New Year. So 2021 is over. We had quite a great 2021. Uh, so a lot of ups and downs. If you learned anything, then the best thing is that there has to be some patience on days where the market is consolidating. And then when the days that the market is ripping higher, or ripping down with momentum, those are the days where we need to capitalize on option playing. So momentum really does play a key factor in sizing and playing options. So it's really easy to get stuck in the chop, and when there are days where there's consolidation coming up, it's best to kind of sit on the sidelines and observe. So, uh, hope you guys caught that. I think it's going to be more of the same uh, every day going into 2022 now, that where we have to pick and choose our days where we need to size large or size small. Um, okay, so with that, let's kind of go over what the market's doing. So market's still kind of holding near all-time highs. Um, what I have up right now are the futures for S&P 500. And you can see that we got our little double bottom um, in the past here. We actually played this out pretty perfectly. If you recall from one of the charts that I posted earlier, kind of followed up through it. So what you're looking at is a nice little uptrend. And so far that uptrend has held. And now we're still near all-time highs. And so what to look for now going into January is we need to hold 47.43. Okay, so 47.43 is a previous area of resistance. Okay, we haven't come back down to back test it just yet. After we made the double bottom and ripped higher. So this is the area is the area that needs to hold. If the futures at any point in time come down, um, simply they break below 47.65 level and come down to 47.43 test. This is where I expect a lot of buyers to show up. Okay, so this is a level you want to kind of mark, keep an eye on. The previous high, previous resistance is the key area that you want to pay attention to. Okay, and so um, this is where I would start kind of playing a bounce plays. Obviously above 4,800, which is our all-time high, that's when we're going to be a little bit more bullish. We can start seeing buyers stepping in to try to play a breakout. Okay, so more money is going to flow into the market. All right, so let's look at QQQ. More of the same here on QQQ. What you want to keep an eye on is simply the 395 level, right? So we've been talking about this level quite a few times now. There's actually, not really much more to say. Just keep an eye on this level. It's a psychological spot. This is the area where most of the trading's been happening. Above 400, we can see 404, and then above 404, we'll start ripping higher. So if 395 breaks, we could come back down again. So this is the area where we want to see the QQQ hold. I did provide um, a little analysis in my chat about how hedge funds tend to start selling their losses or closing out losses December 1st, primarily for tax benefit purposes. So you could see that this right here, this red candle is December 1st. And so this is likely hedge funds closing up their losses so they can have a little tax deduction. And then wash sale rule says that you can't buy the similar security within the next 30 days. So typically on a calendar, a hedge fund wants to show, okay, the year started on January 1st, or in this case, January 3rd. So they likely do it 30 days prior to that so they can get back into it without being penalized for the wash sale rule and still take advantage of the tax deduction. Okay, so pay attention to that. Obviously 400 level, psychological mark right now. Keep an eye on that. This is the area where we want to pay attention to. Previous area of resistance, it's hit there quite a few times. All right, so quite a few times we've hit. All that a hit. It tried to hold here, broke below Friday. It tried to hit one more time, and then we had a bit of resistance. So watch 400. Above 400, it can go test 404, and then on its way to all-time highs. So something to keep an eye out. 395 on the bottom end, 497 on the top end. And I'll keep you guys posted as I see the market move live. Okay, so let's go over some of the plays. As far as economic calendar, we got non-farm payrolls on Friday. It's going to be pretty big. Monday, we got manufacturing. So we'll see. I don't expect massive movement just yet on the first half of the week based on economic movement news. So it'll be interesting to see how things pan out. And then going into end of January, starting beginning of February, we got earnings season. Okay, so earnings for at least the major companies start beginning of February. So just be mindful of that as we progress through January. All right, so let's look at our first play. It's Snowflake. I'm gonna do two things. I'm gonna show you a bird's eye view on a daily time frame, and then I'm gonna zoom in to kind of discuss the details about the play itself. So Snowflake so far, it had a pretty nice run, this entire past year. It hit a high of 405 and then kind of slowed down here. We formed a double bottom off the back in December, right? Also December 1st, as you can see, coincides with earnings. And then another bottom we put in on the 16th, making this a nice little double bottom area, right, roughly. So now what we want to see is, well, can these higher lows hold? And then off the top end, you have this downtrend where you have lower highs forming, right? So here's a lower high, here's another lower high, and then you have some downtrend movement. So what we are looking for now overall is this consolidation period to kind of finalize and to break out of this pattern of this which looks like a pennant, but I think the way it's set up, it can break out in either direction. So at least on my end, I'd like to see if it could break out to the top side. So I'm looking for playing calls above $358 level. And so this is valid for the entire week. If we can kind of get up to that area by Monday, on a pullback on Tuesday, kind of hang out in the 350 range, and then Wednesday break above 358 for a trigger. This could easily go up for at least 10, 15 points. So keep an eye on this breakout, and then possible roll-up play above the final price target at 367.61. Okay, the next one, let's look at Tesla. I think everyone's been eyeing that one just because of delivery numbers. So let's take a look. So if you recall, we got in here, right? We kind of played this area, and I kind of told you why we got in. If we kind of go back historically, this was a previous area of resistance, and we came back down to retest it, and you could see the rejection here, came back rejected, and then this is where we kind of entered. So this was our little entry on leaps, shares, whatnot. It looks great so far, but be mindful there is a gap over here, so that's something just to be aware of. Okay. Now, delivery numbers were fantastic. They definitely beat the expectation by a good amount. So the first thing to be mindful of is number one, where do we gap tomorrow, right? If the news is as positive as it seems, very likely that we're going to start gapping higher. So it's all going to depend on where the market gaps up and where Tesla gaps up. As of right now, what I like to see, number one, on the bigger time frame, just be aware, there is this downtrend, right? This is a bigger downtrend. You have 1, 2, 3, 4, almost 5 touches where Tesla has come into this downtrend and just absolutely rejected, right? Here's the previous time. So the question now is, are we going to gap up above there, or are we going to be below it? That's only time's going to tell. We'll see how it plays out tomorrow morning and play accordingly. Uh, as for now, uh, I am looking at calls above 1085, and I'm trying to see if we can hit at least 1, 2, 3 price targets towards 1113 and kind of close in this area. Okay, so if we can close in this area and kind of stay above this downtrend, breaking the downtrend, there's a possibility that we can rip higher the very next day towards 1160, 1172 before we start seeing some resistance. The reason this area is of interest now as an area to exit, well, you could see previously the number of times sellers took over in this trade. So here's one huge red candle, right? Previously came back into this area. Again, sellers took over, stock dropped. Again, sellers took over, stock dropped. So far, every time we've come into this range, we've seen selling. So what we want to look at now is number one, where do we gap up? And then from there, we can take a look at exactly how we want to play this. So this little falling wedge, bull flag, that you want to call it, this will be likely will break, and then we're gonna play accordingly. So I'll likely call an audible on this depending on where we open. So kind of pay attention to that one. Okay. There's a little gap up here, but I'm not going to worry about it because it's out of range right now. There's no point in talking about it, but just so you're aware. All right. So my plan with leaps or swinging whatever short-term options, I will likely exit here if we hit this area anytime this week. Okay. I'm not going to wait to see who is stronger. Very likely the stock price, if it comes into this range, it's going to start finding resistance. Sellers will take over, and I'd rather wait for the productive price action to go through before seeing if there's another leg higher. Okay, so pay attention to that one. Let's look at Upstart. So Upstart on a bigger time frame, just been on a downtrend ever since it hit the 400 range back in October. So slowly just kind of selling off. There is a big gap over here due to earnings catalyst. So big downtrend, and since then it's kind of sold off. Recently broke the downtrend, trying to bottom out, and it actually did. So overall, I think this is ready to start moving back up. I think the bottom is in based on how the price movement has slowed down to the down end, to the downside. So let's kind of zoom in into like the 15-minute and see what's going on. Let me look at, sorry, one more. A daily really quick. Yeah, let's look at daily really quick. So there's a quick trade here above 157.22 towards 161.66. The best trade is actually the setup over here, right? So if it can clear 162, so it's hit resistance quite a few times, right? So previous area of right here. Go. So rejected, right? That's a wick rejection. That's a rejected again, rejected again. Okay, so looking at that, that is a key area for Upstart to overcome. If it can do that, very good chance that it's ready for a swing. Likely we can take a week out swing, but as of right now, at least for tomorrow, possibility of having a quick day trade off the 157.22 level above 161.66. Actually, even like 164 above that, I'd start feeling comfortable taking a like a multi-week swing back to the upside. Okay, keep in mind we already kind of caught this end right here. For leaps and shares. So, you know, whichever ones you took, they should be up at least 10-20%. So just looking for a day trade here, and then likely a swing above as it starts showing a little bit more strength. So let's take a look at Square. Square's been beaten down as well. I'm gonna look at, yeah, let's look at the daily chart. So kind of a similar story, right? Like all of, since it hit a high back in August, it's done absolutely nothing. It's been sideways, and then it just it broke down. So if we're to kind of look at a near-term downtrend, right? It's starting to bottom. So if we were to kind of look at this, the downtrend is not as aggressive anymore, right? The drops are decreasing in velocity. So, and you can see a double bottom being formed right there. So comes down, bounces, hits back, hits resistance, which is a previous area right here on a in this 170 range, which hits as a resistance point, comes back down, bounces again from the similar area, and now looks like it could be ready to bounce. Just because this stock's been beaten down, I think it's worth a shot to play the upside now on this one. Just because the bottom looks like it's in, very likely that this is going to move in the coming days. Okay, so here's that red downtrend on the bigger time frame. Looking at one calls above 166 towards 170, and then we'll play some roll ups above 170 if it comes to that. Okay, let's look at Zoom. This one almost didn't make my list because I'm not a big fan of Zoom ever since it's been on this downtrend. But a couple of things that I'm noticing right now. It looks like a triple bottom is in, right? So here's one bottom, here's another bottom, and then this looks like another one that's being put in. So the rate at which it's been dropping seems to have kind of slowed down right here, and so bottom may be in. In addition, there's a lot of COVID news with cases rising and whatnot, and Zoom is obviously a COVID favorite, COVID stock. along with Netflix and other indoor stocks. So this is purely a setup based on the current events right now, as well as technicals where I'm it's starting to show a bottom. So it's definitely worth a shot here if it gets start breaking above 192 range. Above 196, 197, again, there's a play for a multi-day swing. So a very similar Square, Upstart, Zoom, and then I think I'll show you Affirm. That one's also a very similar setup. Okay, so let's look at Neo is next. So Neo also had delivery numbers as well. So I think all EVs should move tomorrow. We'll take a look how much. But overall, someone knew something, right? Here's December 30th. You see a big green candle, and then Neo came out with numbers. So someone definitely knew something, which is always a given in the stock market that somebody has some sort of information. But anyways, you could see the downtrend currently in the daily. We're looking for a couple of things tomorrow. What I want to see is, number one, can this downtrend break, right? So we had a nice bullish candle. That's a very strong candle. Something we haven't seen ever since this thing's been dropping, right? When's the last time you saw a candle that green? Uh, it's been a very long time. So this is a strong signal that the stock may have bottomed right here, and you could see another double bottom right here. So tomorrow, want to see a couple things. If we gap up above 33.10, there could be a play um, for multiple reasons. Number one, the downtrend will have broken, and then we could see a nice rally. This would be the base, and then we can see another rally up. Ideally, what we want to see is Neo close above 33.10 on the daily. Okay, so if it can close above on the daily, very likely that we're going to start seeing a push back up. All right, so get rid of that. So you can take a look. Right, so above 33.10, you can see 33.44, 33.85, 34.50. On the down end, well, let's just see if 31.51 holds. Okay. SE Limited. This is another one of those stocks. Again, very similar setup to Upstart, Square, Affirm. Same story. Just been on a downtrend. The rate of the drop, this downtrend, it's finally slowed down here. It looks like it's bottoming. Ever since mid-December, you could see it's just been sideways, right? So it's a good sign that a bottom's being formed right here, and it could be ready for a move back to the upside. Zooming into the 15-minute time frame, what we're looking for here is a crack above 226.51. So if it can do that, there's a good chance this thing can start flying. I'm thinking, so we bought some shares on this one, but I do think that once it starts closing above this level, it should set up for at least 270 at least. So quite a big move. I'm expecting on this guy. So the next time we'll see trouble if it starts breaking higher is actually right here. Okay, so literally right here. On a bigger time frame, I'm kind of watching this area. So this is a simple drop-based drop. Okay, so if you're unfamiliar with that, just watch some of our videos and you could see the drop-based drop, and actually pretty interesting how it works out, right? You could see there's another rally, base rally, test from the top, bounce, test from the top, bounce, test from the top, bounce. So this is the area to kind of focus on next. If we start pushing higher, this is where we'll start seeing resistance and likely where I would start unloading my long-term position and see if there's strength above to play another leg higher. But for now, let's see if we can crack to 2651 tomorrow and catch a couple, catch at least 10, 15 points to the upside, maybe even have some roll-ups coming in. Okay, so if we see some consolidation, okay, one more thing. I just want 220 to 218 to hold. If this area right here can hold this week, I'll call out a swing into February, March. Okay, that would be a good sign. If for the week it can close above this area, to me that's a very strong sign that this thing's gonna start moving higher. All right, let's look at a firm. Another one of these very similar setups, just been beaten down. Right, so there's your downtrend. It's just making lower highs, lower lows. Lower highs, right? Lower high, lower high, lower high, lower low, lower low, lower low. It's starting to slow down just like the others. I want to see this downtrend break. So it looks like it's forming a bottom and ready to rip higher. And I think the best way I can explain why breaking a downtrend is important is kind of going back to Tesla. I think we looked at this one previously, but I'm going to show you, there's a lot of new people in here, and I'm going to show you why it's so powerful. Here, take a look at this. If we look at this right here, here's a downtrend break, right? There is a downtrend break in previous time that we played. You see a clear gap up, and then Tesla ran, right? So you could see the power of such a downtrend that once it breaks after such a long time, there's a lot of momentum to be gained. Now, that doesn't mean it's going to have a Tesla-like move, but it could indicate momentum back to the upside, where right now it's just been dominated by sellers ever since early November. Okay, so on this guy, what we're looking at are calls above 106.13 to a play towards 111, and then above that we'll start rolling up. Yeah, so on this one, very similar kind of watch on the weekly. I want to see this area hold right here, okay? So if it can hold between 100 and 98, that's a pretty good sign on the weekly that it's ready to start bouncing. So keep an eye on that. If it can do that, then very likely next week I'm going to start swinging at least a month or two out on a firm. That Facebook. Facebook's in a very interesting area. It tried to break it last time and then just rejected at this previous area right here. So as of right now, I only see quick trades on Facebook. Yes, this uptrend is holding so far, right? You can see the uptrend holding, but look at this. There's nothing but sellers here, right? Who dominates this area if you look at it? Sellers, sellers, sellers. Previously, sellers. So in order for Facebook to kind of get up there, it needs to break this 354 level. Okay, so once it starts consolidating in this area, we start seeing green candles print. Facebook will have a better setup to play to the upside. Right now, it's just good for quick trades. All right. So keep an eye tomorrow, just a quick trade above 338.68. If market momentum holds, this uptrend holds, good chance we can catch, at least 10 points to the upside. A really good setup is actually above 354. So above this area, we could have a nice little setup. But so far, it's just an average trade. Okay, so pay attention to that. Let's go over Shopify. We've been playing this on and off. This one is really, you have to watch price action on this one. This one's not one of those where you could say, all right, I'm just going to buy calls when it crosses or triggers, right? So we had a downtrend break. It came back, retested, held, pushed higher, sold off on Thursday, sold off on Friday with the market. I think this week, I just want to see 30-50 hold. All right, if it can hold this area, it should push back up higher. Above 1392, it can get back towards 1400. And then above 1421, it could see 1430, 1450. So this one is definitely one of those where you don't want to play market orders. You have to take limit orders on this guy. Okay, if you take market orders, the spreads are so wide, you're gonna end up paying. You're gonna pay a significant amount, and so always do limit orders on Shopify, just because liquidity issues and the spreads are pretty wide. Okay, let's look at the last two. Apple. Okay, so Apple, Apple's been doing pretty well. The market sold off quite heavily. Market sold off quite heavily, and Apple kind of hung in there. So I think tomorrow, what I want to see is, can Apple continue to defend 177 range, right? Can it just kind of hang out here, hold this little downtrend that it's been forming, and then kind of rip higher? Above 182, Apple can see 188, 190. So right now, it's just an average trade above 178. The best setup is the new breakout. So let this thing set up. So far, it's looking pretty good, right? What I see right now is buyers in control. Now, it looks like there's a lot of selling, right? There's a lot of selling, but ultimately the buyers are still in control. And you could tell based on the pullback. So you look at this pullback, the time Apple came here, right? You saw a 5.3% pullback. Here's another time Apple came into that range. You see a 7% pullback. Okay, within like 3 days, 2 to 3 days. Look at the pullback that's happened here, right? Ever since in the last 4 days. It's about 4%. So this is telling me that there's not much, the sellers are not in control. Yeah, we have some profit taking, but if this area can just hold, very likely this is going to start breaking towards new highs. All right, so you see sellers dominating, couple of sellers here. They're not really dominating. We're not seeing these big red candles and flushes coming down. Right. Yeah. Okay. Um, okay. More thing. Let's look at. Let's go back to Facebook really quick. Let me make sure it's. Okay, that's right. So, fix that. So I had the stop loss. The stop loss is the same for both of them, but not the put and call trigger. So go. Thank you, hurdle rate, for pointing that out. Okay, let's look at the last one, AMD. Again, I think this one's also only good for a quick day trade. So above 145.60, you can catch maybe 2-3 points to the upside. I really don't see much setting up here for AMD. The one thing I do know is it might get ready to move probably towards earnings time. And I think the best way to show you is this, right? So if we call this, right, this is your high, here's another lower high, and then we can draw this right here. So it looks like it's entering a little longer period of consolidation, and right towards the end of March into February, it looks like in May, that's the catalyst. It needs to either break up or break down. So not really much happening with AMD. I think this one might just bounce up and down the rest of the month. So don't try to force trades on this one until we see a downtrend break here. Okay, until this breaks, I would treat AMD as a quick trade anytime it's called out. Okay, the same thing is actually also true for Amazon. A lot of people want to look at Amazon, but here, let me show you something interesting, right? So if I go to a monthly time frame, look at this. I look at a monthly time frame. 10 years. So far, if you look at this, here is an ascending triangle, correct? And you see the breakout, and you can see how much it broke out and ripped. Okay, what's happening here? See it? So it is setting up for a similar type move, right? But assuming that that's going to happen just because we're seeing a red month, that's a little premature. It could just continue to consolidate. I think the best thing to do with this stock is just wait for this break. Okay, so I think the break that we want to look at is right here. So if it can break 35.50, okay, once it starts showing strength above 35.50, this thing can start moving higher. Until it does that, buying, you're gonna have to buy a lot of time, right? And it's gonna waste a lot of data. So just be careful playing Amazon. Yeah, it's setting up, but we're looking at a monthly time frame, right? This setup is on a monthly time frame. So it's kind of best to wait for this 35.50 to break. And once this breaks, this is good for all account types. Big, small, we can play some debit spreads to accommodate small account types. So this break right here, we could expect this sort of movement. You can see that since we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. It's been about 17 months of absolutely nothing. Right, so buying calls in this consolidation, you're just kind of, you're gonna have to pay for data burn. So my best thing, I would say, just wait for it to break out. We've gotten some false breaks and they haven't lasted. So wait for it to show strength. Once it does, it should be ready to play. I don't think it's going anywhere just yet. Okay. Okay, so that's pretty much all I have on the technical analysis part. The next thing I kind of want to talk about is, let's see, managing, All right, so when it comes to managing your portfolio, after earnings season's over in February, okay, once earnings are over, there's a very good chance the market's gonna dip. And now, uh, I'm kind of speaking a little well ahead of myself, but um, I'm looking at a couple catalysts, right? So inflation is running high, number one. Two, Fed needs to curb inflation, and very likely we're going to get some rate hikes. And so that's typically bad for the market just because borrowing comes down if the rates are high. And if borrowing comes down, spending comes down. Spending comes down. Effectively, you see lower numbers on the top and bottom line for companies. And so the stock market being forward looking will kind of price that in. So after the earnings season here in end of January into February, we're gonna have to start hedging a little bit. Okay, so if you have a portfolio of shares, if you have leaps, that's around the time where I would start hedging. And we can talk a little bit more as that time comes near, but I just want to kind of prepare you for it. Is that we could see quite a bit of a pullback after the earnings season, and so we need to protect the profits that have come up so far from all the trading and all the investments. So there's going to be ways to do that. I'll discuss it probably mid-January. I'll have a special meeting for it. I'm going to show you exactly what I do and how I like to protect and hedge my portfolio, basically buying insurance policy. And so if the market comes down, I stay at a neutral delta, and then I'll use the money made from hedging to reinvest at a lower price point if the market comes down, right? So um, be on the lookout for that. So mid-January, I'll look at price action, see how the S&P 500 and QQQ are behaving. The price action will give a lot more insight as to when that's going to start happening, so we can prepare ahead of time. Okay, so that's first thing. Second thing, this year I'm going to start a $1,000 account. I think we had a lot of people coming in here with small accounts, and it's hard to translate the things that I play into a smaller account. So what I'm going to do is I'm opening a cash account. So what that means is there's no day trading limit when you're in a cash account. You open cash, you close cash. You have to wait for the funds to settle. So that's the downside of it. You can't just buy and sell, but you're not limited to uh, the PTD rule. Okay, so you don't have to become you don't get hit with the pattern day trading. Um, so it's going to be a full cash account. If you don't know what that is, call TD Ameritrade. They can do cash accounts. Almost any brokerage firm can do cash accounts except for Robinhood. Robinhood does not do that. So just be mindful of that. Okay. Okay, so last year, overall, it's been a good year. Let's see what this year brings. You could see so far the market's just been on a nice little uptrend. Um, if we start seeing dips in the later half of the year into the summer, um, very likely that's the area I'll start adding again. But as of right now, I'm pretty much done investing. Going to see if the market can rip higher into January, into earnings, and then maybe mid-year, I'll see if the market pulls back, and then I'll start adding more shares again using profits made. Okay, so um, just so you're aware of all that, one final thing before I pass the ball to Doc if he has anything to share. Is let's look at some of these plays. So some of these plays, well, mostly every play that I post, from deciding where to enter, from where to exit, okay, to where the stop losses are, where the profit-taking price levels are, and watching the overall stock. All these things we kind of do for you here. Okay, so um, just you have to understand that we don't just call out things because we feel like it. And so if you want to learn to trade, if you want to make money, uh, kind of pay attention to what we're doing. You have to pay attention to somebody who knows what they're doing. Okay, if you come here, you're paying $150 and then you go do whatever you want to do anyways, then don't pay the $150. It's a waste of your money. There's no point in you being a full member here. So if you come here, kind of follow along to see how we're trading. Clearly, you could see the profit loss channel. I want to let you take some time to scroll through it. Okay, every day we're walking away with some good money. That doesn't happen by luck or accident. So, uh, if you're gonna start doing whatever you want to do, then just understand if you're not at the level of a good trader, you're gonna have some consequences, right? So then that's gonna hurt. So kind of learn the proper techniques that we kind of talk about, we teach you with money management, how to identify a good entry or not. Start paying attention to these things because if you're gonna try to press your luck and I think Tesla's gonna go up and I think AMD and Apple are gonna go up, that's not really trading. That's just that's nothing, right? So don't risk your hard-earned money on guesses, is what I'm saying. And just it's okay. It's okay if you're not a professional trader and you can't see price movement the way I can. But be honest with yourself and then just try to learn if that's something you want to do, right? And if you don't know it, then be honest with yourself and then try to learn it before you start doing things on your own. So that's the one piece of advice I'm going to give that's not financial, um, to a lot of you that still kind of struggle despite all the profitable plays that we post, is try to go back, review what you did right, review what you did wrong. I can tell you with confidence, the wrongs are very emotionally driven decisions or personal, I have a good feeling decisions. And some may have worked out, some may have not, but they can't consistently work out. And I can tell you that from experience. So, just be mindful of that. This is a business. Don't treat it like a game. Okay, so I'm going to pass the ball on to Doc. He's one of our other analysts here. Doc, do you have anything else to add onto anything I've shared? Please feel free. I'll give you the I'll stop streaming right now, and so you can address.
Cool. Thanks, KP. That was all great. Yeah, I'll keep it short, guys. I love all of KP's plays. I literally review them all, and then I add them to my screens, and I typically add all of them to my screens every day. He finds the great ones. So I don't have much more. I'm watching swings for tickers like Bank of America, BBIO, PayPal, but these will take a while to set up. So let's concentrate on what KP gave us for tomorrow. Obviously, I'll be finding more for Tuesday, which is my day. But patience. And speaking of patience, I just want to talk about going into the year. Um, there, no great trader, you'll never hear a millionaire trader say, I got rich off of, YOLOing or aping into one trade. They've never said, oh, let me put all of my money into one trade. Okay, this people that made millions and billions of dollars off of Dogecoin and SHIB or whatever. That's one kid out of millions of people who lost money, right? So every time someone wins a lot of money, someone else has to lose. So basically, what I'm saying is there's 250 to 252 trading days in a year. It takes one time for you to lose your discipline and subsequently lose your account. And I've been there. I've been there more than once, and it's been over a year since I've acted on that terrible habit of FOMOing and getting greedy, and my account's been growing ever since. So all in all, guys, like KP said, treat this like a business. If you want to go play the lottery, then actually go play the lottery. You have a better chance. I promise you from experience, from talking to all the traders who are successful, you have a better chance of winning the lottery actually by playing the lottery and not trading. So risk management is key, guys. If you don't understand risk management or you can't handle your emotions, then you need to take a step back and you need to learn how to manage risk and manage emotions every single day. I mentioned in my post on the 31st that it is hard, it's stressful to do this, but being here, you have an edge, you have the algo, you have the live callouts, entries, and exits. So if you're here to make money, just focus on being consistent and let KP and I find the best setups day in and day out because that's all it takes. It just takes consistency. 250 days out of the year, find the best trades and execute them without emotion. So looking forward to the years, guys.
Awesome. Yeah, that's I couldn't have said it better. Thank you. Thank you so much. All right. If that's it, let's call it a night. It's been about an hour and 15 minutes. I'll see you guys bright and early tomorrow. I'll narrow down and do a quick pre-market scan, and then I'll be back in this live trading room. We're voice only, and then we'll do live callouts, live buy-sell alerts as things unfold from the watch list. Okay. Thank you so much for coming and taking the time to listen. We do this every Sunday, so come by. Hope you learned something, and then yeah, let's make some money tomorrow.